Hey everyone. The question always is, what is the hot part of the market? Where should we go right now in these difficult times? I think it is a stock picker's market, and there are select stocks that seem to be very hot. You can't help but see appetite suppressants as being a major force in the market. It's really like the Tesla in healthcare right now. And the two stocks I'm looking at are Novo Nordisk and Eli Lilly. Appetite suppressants are amazing. They have major effects on the human body, and it's actually reducing people's intake of junk food. Walmart, which has both a pharmacy and a grocery store, of course, can monitor how much junk food people that are on appetite suppressants are eating, and they noted that people that use appetite suppressants are buying significantly less junk food than they used to. The big one is Ozempic. It is major. They're going to have increased earnings. I'm more tolerant of them having a higher PE. Eli Lilly has like 3 or 4 appetite suppressants, and the recent studies on the new ones that are yet to hit the market are just astounding. Their average weight loss is 52 pounds. Wow, that's the average. That means half the people are losing more than that. It's an amazing area that I think is investable for right now in these difficult times. Ozempic is so successful in treating kidney failure that they stopped the trials early. They had enough proof that it's overwhelmingly successful. It's so successful that they're worried about dialysis firms. Now, I know you're all worried. You're all thinking to yourself, oh, those poor dialysis firms, whatever will they do? They will have less people having kidney failure. I know you're very worried about that. We're not worried about it at all, are we? Novo Nordisk sign is NVO, and it's a major pharmaceutical company. It's worth over 450 billion. Its forward price to earnings is about 35. Its earnings growth rate is 25. But you want to consider that I think their earnings are going to increase massively, and the price to earnings is going to come down, and their earnings growth rate, I think, is going to skyrocket. When you have this outstanding of success for such a problem that affects so many people and so many health conditions, diabetes being one of the major ones. I think when we look at this company, again, I think it's a Tesla in the healthcare field. I think we're going to have explosive growth. It's already been growing steadily. You've got a safety, steadily growing company that has come upon what looks like almost medical miracle. You can see from the chart, their 5-year chart, they've gone up steadily and they've spiked up recently because of Ozempic. I think that's only going to increase. And it's the kind of stock that resists a recession because people need to take care of their health. Insurance covers many of the costs. I think their insurance companies will find it effective to allow this to be covered simply because it prevents so many medical expenses for the insurance companies. As we look at that 5-year chart, you can see it's a good long-term investment that steadily moves up. It's well above its 50-day moving average, and it tends to always have a good relative strength number. Being in the 60s, 70s, and 80s is nothing unusual for this stock. Eli Lilly's symbol is LLY. They have a number of appetite suppressants. I think they have a bigger pipeline, and they are a bigger company. They have a 580 billion market capitalization. Their forward price to earnings is 54, and their earnings growth rate is 20%. Their earnings growth rate is 20% versus 25%. These are decent numbers, except, of course, the price to earnings is high. I think they have more in the pipeline. I think they could have their earnings substantially added to. As we look at the chart on Eli Lilly, we can see that it's well above its 50-day moving average, and it has a relative strength of 75. These major medical companies, they tend to have always a pretty good relative strength, and it's a safe investment. I mean, you're talking about the maker of Prozac. Eli Lilly isn't going anywhere. It will be with us for a long, long time and will be profitable. As we look at the chart on the NASDAQ, which for me is the market, because that's literally where I buy almost all my stocks. As we look at that, we can see that it seems to be forming almost a double top, and that can be a sign that the market's going to take a dive. The world news is all bad. We have people talking about 50% chance of World War III. By that, they do not mean an atomic or nuclear war. That's pretty much off the table. The world seems to have agreed nuclear war, no, that's not something we're going to do. We do these prolonged wars. We do them by proxy. We're fighting a proxy war through Ukraine, which I fully support. I think we have to defend their right for freedom. We also face a similar situation in Taiwan, which is actually more difficult. It's less likely to occur, and let's hope that it doesn't, because we're consumed right now by Israel and Gaza. Israel is going into Gaza. They were attacked by Hamas, and they get the terrorists out of their throats. When you start having different conflicts like this around the world, this can be the prequel to things around the world exploding even more. Other countries can look at this, and Biden has warned other countries not to do this, but they can say, well, the United States is doing a lot of support of Ukraine. That takes their attention off that. They're supporting Israel in the Mideast. Now would China think, well, hey, the United States is kind of busy, we will be more likely to succeed with Taiwan. And there's also some talk that there's conflict in Kosovo that's starting to kick up, and that could turn into something. When you start having all these separate little conflicts occurring around the world, it could lead some other countries to take advantage, thinking that the United States can only handle so much at a time, and maybe they would be more likely to be successful. This is a major event. If things really widen in the Mideast, that could be something that triggers a crash. I think for us to have a crash, we need a major trigger. That's really all we haven't had so far. I think the interest rates are a threat, and they're a long-term threat. I don't think people waiting for a crash, unless there's a triggering event, I don't think it's going to happen. It's because the Federal Reserve has taken such care with their bank term funding program and their discount window. They're already bailing out the financial situation. They learned a lot from 2008. We can thank them for this. The reason we haven't crashed is because they learned so much from 2008. I don't think it's going to crash. I think interest rates are going to go higher. I think you're ahead to find companies like I've given you today that are long-term stable stocks that are going to keep increasing in value, that are safe. And safety is the main thing for right now until we turn the corner on this and we start going up, which it could happen towards the end of this year. A lot of people are forecasting recession next year. Hey, I'll take next year. Right now, I'm trying to get through the end of this year. And we could have a pop-up towards the end of this year if the Mideast doesn't deteriorate further. But thank you.